Welcome to Dukan's Finance. In this series of videos, I hope to explore together with you and answer two very important questions in stock market investment. Number one, what are the fundamental rules of stock markets in the United States so that it can guide us when to sell and when to buy? Number two, what are the rules of international stock markets so that we can know whether there are opportunities for investment elsewhere outside of the United States? This is the first video in this series, and we'll focus on S&P 500 and try to use this video to understand what are the rules underlying the ups and downs of S&P 500 throughout the history in the past 85 years. So what you're seeing here is a daily close price of S&P 500 from late 1920s to now, which is November 2020. And you can see that in the past about 10 to 11 years, starting from mid of 2009 to now, the S&P 500 index really increased about more than fivefold. And this is a huge increase. And some of you may say, well, look, this is unsustainable, and this is a bubble in the stock market, and it's going to crash very, very soon. Or maybe in a year, maybe in 2 years, it's going to have a crash. The others may say, no, it's not going to happen because the interest rate is really low right now, and the United States government is printing lots of money to put into the market, so the stock price is likely to skyrocket further. So which one is true? So let's go and find out. These are the same data you just saw, but I've converted the plot into a log scale. So in log scale, we can have a better view of the long-term linear growth of the stock market. And on top of this plot, I also plotted a blue line. And this blue line represents the average growth of the stock market, in this case S&P 500 index, in the past 85 years. So why 1945? I will leave that to another episode to explain in more details. But for now, it's suffice to say that the average annual growth in the past 85 years of S&P 500 index is more than 7%. So this is actually a very good return rate overall. Number two thing we can see is that although I did not utilize any of the turning points in the stock market when I plot this blue line actually captures many of the important turning points in the history of S&P 500. For example, as my cursor is pointing to, in the late 1950s to early or mid 1960s, this blue line is very, very close to the turning points of stock markets. Same thing happens after the stock market crash in year 2000, and the stock market touched this blue line and started to rebound. So this blue line is a very important line in the history of S&P 500. Now, in addition to this blue line, I'm plotting 4 additional lines to help us to visualize the trend of S&P 500 in history. So one of the line is this green line. This green line represents 2 times the stock price of this blue line. And another line is this red line. And this red line represents 50% drop from this blue line. So from this red line to the blue line is an increase of 100%. And from this blue line to this green line is another increase of 100%. So things become very interesting when you look at the trend of the stock market using these 2 lines. Number one thing you can notice is that it rarely happens when the stock market actually goes beyond these 2 green and red lines. There are only twice in the past 85 years, when I mean twice, I mean starting from mid-1930s, that the stock market actually gets close or slightly over this green line. So one of the time is the year 2000 stock market bubble, that the stock market just touches this green line or maybe slightly going over it and start to decline and crash down. So that's number one time. The second time is actually in the late 1930s when the stock market again goes to this green line and slightly over it and started to turning down and crash down. So it's very important from this view that if ever the stock market gets close to the green line, it should be a good time to sell your stocks. Same thing happens with the red line. So there are 3 times in the history of the past 85 years that the stock market actually touched this red line. So the most recent one is after the 2008 financial crisis. the stock market in the early 2009 started to touch this red line, and once it touched this red line, it rebounded afterwards. Same thing happens once in the 1970s and once in the 1980s. So if you had bought some stocks during this downturn in 2009, I really have to congratulate you, because you really caught one of the only 3 times in the past 85 years when the stock market is. In addition to the green and the red lines, I also drew 2 very important lines on this plot. One is the cyan line, which represents 30% increase in price from this blue line, and another one is the magenta line, which represents a 23% drop from this blue line. Why these 2 lines are very important? There are 2 reasons. Number 1 reason is that in the past 85 years, about 2/3 of the time, the stock price actually were fluctuating between these 2 lines. The second reason is that throughout the history of S&P 500, these 2 lines also capture some very important turning points. We'll use a recent example to indicate why and showcase why these 2 lines are important. So after the 2000 stock market bubble, the stock price crashed and dropped to around this blue line. Then it started to recover until it reaches this cyan line, and then started to crash again, and this time due to the financial crisis dropped to this red line. And after this stock market dropped to the red line, it recovered and touched this cyan line, magenta line, and then start to further increase until it gets close to this blue line. And due to the COVID-19 in the recent history, so we can blow this up to further see it, the stock market price was between the blue and the cyan line before it started to crash due to COVID-19 pandemic. And the crash led the market drop to this magenta line, and which then started to rebound after this. So because of these 2 reasons, the cyan and the magenta lines are also very important lines in the history of S&P. With the understanding of the rules we just discovered, we can now start to look at the stock price and really to see where does S&P 500 index stand right now. So what you're seeing here is I'm no longer plotting the data in a log scale, but just in a regular scale of S&P 500 index. And you are seeing data from 2018 to now, which is November 13th, 2020. And these plots, this is a candlestick plot. You cannot see the candlestick very easily because this is a daily candlestick plot. And with this plot, you can actually start to see some, again, confirming the importance of these lines, especially the blue line. So you can see that starting from 2018, the stock price, they increased above this blue line and dropped till it touched the blue line and started to rebound, and again goes over this blue line, again dropped to the blue line and rebound. So this blue line, you can start to see that really captures lots of important turning points in the stock market. So this reinforces our conclusion this blue line is very important. So where do we stand right now? So here is what we are roughly here. It's over 3,500 of S&P 500 and is somewhere between this cyan line and the blue line. So it's clearly not in alarm zone. So if the S&P 500 goes over the cyan line, I think it becomes alarm zone. Doesn't mean it will crash right away, but it has a high chance to rebound, coming back down after it touches this cyan line. So it's something to watch out for. But clearly, it's also not the lowest point that represents the greatest buying point, right? So if you bought some stocks during this crash in March of 2020 or slightly afterwards, I think you are, really capturing. You really captured the important low points of recent stock market. So now, of course, it's not the best time, but it's probably also not the worst time for investment. So we have to really watch out the trend of this S&P 500 to see if it goes further up to touch this cyan line. And if it does touch it, I think it becomes a very alarming point that we should start to think. First thing, we should be very cautious if the stock price touches this cyan line to probably not to invest too much further, but also to watch out potential crashes after that. So what will be the likelihood of the stock market in the next year? Of course, it's always dangerous to predict what's going to happen because no one can predict, including me. But we can have a reasonable guess what might be happening in the next year. So one thing that drives why this market is currently above this average of blue line, I think one of the major reasons is the interest rate is really low. So currently the interest rate is slightly above zero. Basically, it's near zero interest rate. So the money is really going to either stock market or the real estate market, and the real estate price is increasing a lot recently. Same thing happens with stock market. So I think it would be reasonable to assume that the market will keep above this blue line in the near future at least because of this low interest rate environment. But I really be cautious if this really touches the sideline because that would be the time I would be start to consider to unload some of my stocks due to this reason. So I think we'll stop here for this episode. And if you like our video, please click the like button as well as the subscribe button. And these will be very important for me to make more useful and hopefully good content for you. And thank you very much. And I hope to see you